diligence for mergers and acquisitions, advising foreign clients on tax structuring under Indian tax laws and FEMA, and representing clients in high-profile transfer pricing litigation. Welcome, Nemin Sir, to today's session.
Thanks for having me.
And finally, joining us is CA Shrikant Mundra, partner at RRCO Mumbai. With over 14 years of experience, he specializes in direct and indirect tax compliance litigation, including MVAT and direct tax disputes. He has extensive expertise in international tax advisory and has worked with clients across diverse industries such as BFSI, food and beverages. Welcome, sir, to today's session.
Hello, I am excited to join this discussion. Thank you.
I would also like to introduce CA Smruti Sabnis as moderator for today's direct tax session. She is Direct Tax Manager at RRCO. Let's begin with the session, but before that, just a quick note. If you have any questions, feel free to drop it in a chat box. We will answer it at the end of the session. Over to you, Smruti ma'am.
Thank you, Tulsi. Thank you for such a wonderful introduction. So we are all, with such an esteemed panel, we are now set down to break down the complexities of Budget 2025. So to begin with, we will first discuss the overall thoughts about the Budget 2025. So we will start with Shrikant sir.
Sure. So I have two words for this budget. I would name it as bold and historic. Bold and historic are the two words which I would like to assign to this budget. Why? Because everybody knows it is top of the town that up to 12 lakhs there is zero income tax. So this was a bold move. Till last year it was 7 lakhs only, and directly the government has jumped it to 12 lakhs. So the overall middle class is very happy, and the economy is anticipating consumption boost with this amendment. And secondly, talking less about it, because now everybody is aware about this topic. I would like to move to next proposal about the which is the boost to the businesses, MSMEs. Right. So government in this budget, government has reclassified micro, small and medium enterprises definition also, where they have given a 2.5x. They have enhanced the limits by 2.5x for I think it is for investment criteria and 2x for turnover criteria. So again, this will give access to government subsidies and government schemes to wider range of MSMEs. Third key budget proposal from which I feel is very important for businesses is doubling of the credit guarantee cover for micro and small enterprises. Medium enterprises are not covered in that. Only for micro and small enterprises. This will double the support, obviously, and these enterprises who actually need money for driving their business needs, they will get more funds for doing business activity. First of all, this 12 lakh exemption will drive consumption. This will have ripple effect on the economy. When they buy from these enterprises, businesses, definitely they will also get some more profit, some more money in hand, and gradually it will ultimately impact the overall economy and GDP of the country. This is something which is expected, which should be expected from this budget. I want to touch upon one more very important point, which I feel what would have enabled government to take such a bold step. What could have enabled? Because suddenly increasing the limit to 12 lakhs and suddenly increasing the limit to 2x, 2.5x for MSME reclassification and doubling the cover. So, in my opinion, the digital transformation of taxation infrastructure is in play right now. Government in the last 1 decade, government has built their digital infrastructure around GST, around income tax, and in 2017 they brought GST. In 2021 they brought e-filing, income tax portal, and they brought in faceless income tax assessments. Leveraging on this technology, this build technology, now government is giving leverage to businesses and individuals, and expecting the economy the way it should grow, or the expecting the economy should grow faster and achieve the 2047 2047 target of defined by Prime Minister Narendra Modi of Vikasit Bharat. So yeah, this is my quick takeaways for the budget. I think.
Yes. Thank you, Shrikant sir.
Thank you.
So we would like to hear from Nemin sir.
So, I mean, among all the celebration about the 12 lakh, and everybody's now, the first thing even I did on Saturday was to compute how much tax am I saving. So once you do that, after that, when the excitement goes down, you have to you need to start broadening the horizon to see what other changes are there. So let's look at the changes from a international perspective. A couple of changes I want to highlight, Smriti, where we've it's a indirect indication of US India wanting to strengthen its ties with the US. So the first change we are talking about is cryptocurrency. So in 2023 we introduced the taxation of cryptocurrency. That was considered the first step in a long journey of recognizing crypto assets as a legitimate asset class in India. Now today we have taken, in this budget we have taken yet another step of introducing reporting requirements for crypto assets for the cryptocurrency exchanges, and other reporting entities would now require to report crypto assets. So this would fall in line with the euphoria around cryptocurrency which we are seeing in the US today. As we saw when President Donald Trump won the election, Bitcoin crossed 1 lakh, and because President Trump ran on a crypto agenda. So in that sense, India has taken one more step towards recognizing crypto, maybe in a way trying to align themselves with the philosophy of the current US government, which is extremely pro crypto. The second change I would like to discuss is India announced, the finance minister during the budget speech announced to develop a new model bilateral investment treaty. So we already, this government already in its first term had decided to junk the old bilateral investment treaties and create a new model, and they now want to again create a new model for bilateral investments. This also perhaps indicates the desire to enter into a bilateral investment treaty with the US. Maybe some of the current terms of the current bilateral model investment treaty may not necessarily go down well with the current administration in the US, and maybe we want to get better terms so that they are more interested in we can get them to the table, and we can also get some benefits, and it can be the mutual benefit of both the countries. So this is my international perspective on a couple of changes in the budget, Smriti.
Thank you, Nemin sir. Parag sir would like to hear from you.
I think my co-panelist has covered most of the discussion related to individual taxation as well as international taxation. What I personally pursue this budget is something which we have been waiting for 11 years. So I call it as a populist budget. Since the time new government took a reign in 2014, always people wanted this to come. So every budget, the expectations were high. The slab limits were being increased by 25,000, 50,000, 2,000 of taxes saving. So making this happen this time, giving consumer more money to spend was a requirement due for law. So it is an excellent budget overall the way it has been put. In a pressure situation where the world is going into a tariff war, people are trying to look at generating a demand internally, and when demand needs to be generated internally, the people needs to be given more money in their hand, and that's exactly what is happening with this budget this year. 1 lakh crore in the hands of middle class should boost the consumption economy, and my personal perspective has always been little different than what a populist perspective is, that if you give more money in the hands of middle class in India, Prime Minister himself said that we should be a day before budget he said, Ma Lakshmi middle class ki kripa kare. So being from a middle class family, I recall when it comes to Ma Lakshmi, Diwali Pujan and all, we don't spend. पैसा दिवाली के दिन बचा के रखना, माँ लक्ष्मी की पूजा करना और उसको तिजोरी में जमा करके रखना है, मेरे को बचपन से सिखा गया है. एंड आई थिंक दैट्स द कल्चर पीपल हैव बीन फॉलोइंग. तो माँ लक्ष्मी को हम खर्चा नहीं करते, माँ लक्ष्मी को हम बचा के रखते हैं. That's something which is my little perception, that when we are giving more money in the hands of middle class and trying to boost the consumption economy, it should be spent enough, and there should be reason for spending. The higher GST rates, the complexities of the higher inflation may need people to save this money for the future, and if that happens, then the whole purpose of giving more money in the hands of people may get defeated. I am always a person supporting that the credits by way of this tax benefit should be given to boost the consumption economy if really the consumption has happened. So, I am a supporter of a situation where if I purchase something up to 60,000 rupees or up to 2,000 or 40,000, the tax benefit.
60,000.
60,000 tax benefit for up to 12 lakh rupees is given by way of income tax to boost the consumption economy. I am a propagator of the phenomena where I feel that I should be given a GST credit against my income tax liability, subject to I spending that 60,000. So that way government doesn't lose on the taxes and the middle class gets benefited by spending more, be it on the white goods or any other products where I pay GST and I get a credit of that GST against my income. A little different thought of merging indirect tax and direct taxes together, but bang on and directly connected to the consumption. So if I get a 60,000 GST credit against the spend which I do, then government is really achieving the consumption economy in a better way. So looking at the budget, definitely it is a populist, giving more money in the hands of people. Just that believing that people will spend is something now we are trying to look at. Thank you.
Parag sir has really brought a fresh perspective linking the macroeconomic factors with the taxation.
No, absolutely. And so in fact,
Yes.
just to add to his point, that imagine a household, if the government were to actually enact what Parag sir is saying, imagine the wife and kids of every person is going to come and tell them, look, even the government is now giving you credit. Bring that big TV now, bring the big washing machine, bring the new car, That is exactly what we need today. We need more consumption. So that is absolutely the bang on point from Parag sir. Let's hope that somebody is listening and somebody hopefully will implement this someday.
We will discuss this definitely in the later part of the session. But now,
One more thing I want to
okay,
add here.
Shrikant sir want to add.
Yeah, Parag just mentioned about the tweet of Prime Minister Modi that Mahalakshmi Kripa Karegi, like that. So everybody knows here that he's a strategist. He's a strategist, and that was one more classic example of a strategy that he did that tweet one day before the budget.
So as just sir said, and you also said, Mahalakshmi Kripa Karegi middle class pay. So what thought or what advice you will give to our audience for considering this 12 lakh threshold or basic exemption limit? Or there is a misconception in the public that this 12 lakh is the basic exemption limit, or no ITR is to be filed up to the limit of rupees 12 lakh. So what are your thoughts?
No. ITR has to be filed. ITR has to be filed if your income is more than the basic exemption limit, which is 2,50,000 right now. 4 lakh in the new regime. Yeah. So ITR has to be filed even if your taxable income is up to 12 lakhs only. The thing which you're getting is not the exemption. 12 lakh is not the exemption limit. You are getting a rebate. There is a separate section in which you are getting a rebate of that particular
tax.
It's like
a discount.
Yeah, it is a discount.
It's like
it is a
discount
discount.
in the tax which
Yeah.
trying to
So ITR has to be filed. Compliance has to be done.
So also, I had a discussion with one of my relative, and he was saying, like, if I am having income of rupees 18 lakhs, and now the basic exemption is rupees 12 lakhs, so only I have to pay tax on differential amount. So would you also like to clarify on that point?
So I mean, it's very clear. The people have to remember that there is no tax up to 12 lakh, but the tax slabs are still different, which is up to 4 lakhs there is no tax. From 4 lakh to 8 lakh there is 5%, 8 lakh to 12 lakh, and so on and so forth. So if your income is so to answer Smriti's relative, that I'm sure Smriti already gave the answer to them, but let's give that again, that if the income is 18 lakhs, you're paying the tax on the entire 18 lakhs. If your income was 11 lakh 90,000, then you're not paying any tax. If your income is 12 lakh 10,000, then you're paying tax on the entire 12 lakh 10,000. So That is why. So up to 12 lakh, as Parag sir rightly said, this is like a discount which you are receiving on your uh, tax liability. So when you go to a store and you want to buy something which is worth 10,000, and they're saying that it's iske upar 5,000 discount hai. So the thing of value doesn't become 5,000. The value remains 10,000. What you are getting is a 5,000 rupee discount, and you're getting the thing for 5,000 rupees. So that you have to remember. 12 lakh is the amount up to which no tax is payable, but the minimum exemption limit remains at 4 lakhs only.
Okay. Thank you so much, Nemin sir, for clarifying this. So we also discussed right now about the macroeconomic factors. So Finance Minister has mentioned in her budget speech that with the increase in the threshold limit, or with the 12 lakhs rupees, 1 lakh crore rupees has been foregone. So this has definitely, so ideally the budget should be balancing. So what are your points that how this revenue and how this government will bridge the gap between expenditure and revenue? Or is this a short-term strategy of the government?
Me?
Yes, sir, definitely for
I
you.
think on the macro term, let Parag.
So the perception generally is the way government was spending on the infrastructure project. One of the things we should go back a little few budgets back. There was a change in the way the budget was presented. The capital expenditure and the revenue expenditure concept was brought in. Earlier, the receipts and payment used to be tracked. Now government says that what we are spending is capital in nature or revenue in nature. Capital in nature is something that India is creating assets, fiber, bridges, railway, roads. So these expenses, if we are increasing, so it is for the future of the country, for the betterment of the opportunities for the country. And revenue expenses like subsidies and the payouts and expenses which are getting into spending, which are for immediate needs and not really creating assets. So government was spending heavily on the capital expenditure by borrowing. And last year when we looked at the budget, they were more prone towards the infrastructure spending. This budget, there is no substantial increase into the infrastructure, which was automatically or obviously expected. The CBDT chairman the other day mentioned that last year the growth in the direct tax collection was about 14.5%, and this year the growth is supposed to be about 12% or so. It is 2.5% on about 22.5 lakh crore direct tax collection. Gave them the opportunity to try to reduce, because it was already exceeding the budgeted collection. So when they exceeded last year by 14%, they had that leeway to spend that money by giving discount or move this money for the infrastructure spending. So this time they've given the money more in the hands of people for spending in the overall economy, while the infrastructure spending did not boost as it was.
So, yeah, Parag, very well said, very well said. So, I would like to add here, so this vision, this basically aligns with the government's slogan of Sabka Saath, Sabka Vikas, Sabka Vishwas, and then Sabka Prayas. So now this budget is basically Sabka Prayas. Abhi tak, till date, in the last one decade, what government did was Sabka Saath, Sabka Vishwas. Sorry, Sabka Saath, Sabka Vikas, where government spent on infrastructure as described by Parag Bhai. Then government in 2019, government just extended this slogan to Sabka Vishwas, wherein they brought this digital, they transformed the digital tax infrastructure, and they brought various schemes also, like Direct Tax Vishwas scheme or various amnesty scheme in GST. And now this has been given by government in this budget to for the people to do Sabka Prayas, effort for all, from all.
So thank you, Shrikant sir. So we'll move to the next topic.
So before we move, Smriti, just one clarification on the first discussion we were having, that in respect of the 12 lakh limit, we have to remember that there is no this new rebate is not available on special income like capital gains or any other special income like income from virtual digital assets or lottery or online gaming or card gains or anything else. So you just have to remember that if you have 10 lakhs of salary income and 2.5 lakhs or 1.5 lakh even of capital gains, the 1.5 lakh is going to be taxable, the 10 lakh will not be taxable. So just keep that in mind. So again, it's not a blanket exemption on 12 lakh. It is only the normal tax which we pay, and any special tax income which is taxed at a special rate will continue to be taxed even if your income is below 12 lakhs.
Thank you, Nemin, for
So I
bringing
think
out
this
that
also
point.
brings me one more perspective, Shruti, that what is happening. Some of my friends in the society mentioned that I have a 4 family members, so now I can have or maybe some of the cash if I deposit into different bank accounts, it won't be exempt. So there are traders or business owners who deal into cash and they have a cash receipts coming in for the material which they trade in, and they deposit into the bank account and then they trade. So people are believing that by depositing the 12 lakh rupees into one bank account and then another will make the income flows for each of them as a tax free, which is not the situation. The income which you are depositing into the bank account, the source needs to be explained. If the source is not explained, it will be treated as an income taxable at a special rate and which doesn't have any basic exemption. So having a presumption that you will deposit a cash balance or cash amount into a respective bank account of a family member and you don't need to explain anything for 12 lakh up to 12 lakh rupees of amount is completely a wrong presumption, and it has been done away with by bringing in a new provision which has a special rate of taxation, and you don't get any basic exemption with it, you don't get any rebate or any loss set off against such income. So be mindful of the fact that this 12 lakh does not cover such situations where you have a no explanation for the amounts which are deposited into your bank.
So every money should be explained. That is the whole idea.
Then only you will get that
12 lakhs
benefit. 12 lakhs are benefit.
प्रार्थना करोगे तो प्रसाद मिलेगा.
Okay, so we will now move on to the next topic. So that in a budget, in finance minister in a budget proposed a new income tax bill in the next week, with that will embody the spirit of Nyay, and she also promised a simpler tax law. So do you think it will actually reduce the litigation or it will create more complexities?
So, in my opinion, time will tell. Time will tell. Answer your question. But again, this government is a master of slogans. So they have given a new slogan while at the time of talking about this income tax bill, they have mentioned trust first, scrutinize later. So Parag Bhai has already done some LinkedIn posts on this. So over to you, Parag Bhai.
So trust first and scrutinize later is a good intent. The government always had a good intent, but it is not percolating down to the last person in the implementing agency, and that's where the challenges are. So we still see that in the faceless era, people are not given appropriate opportunity of being heard. People are not given the right representation. The submissions submitted are not being looked at, and the orders are directly being passed. All these things are definitely happening. So trust first and scrutinize later has always been a motto of government for a long time, but it has to percolate down to the authorities who are implementing it. The lawmakers are definitely making it with a good intent. They are putting up the citizen charter in place, and things are working in that direction. Some trainings to the authorities to have that faith is very important, and with the intent to have trust first and scrutinize later. If government is proposing to bring in a new law, and this new law will have more provisions which are taxpayer friendly, and if it comes with the intent to trust the taxpayer, then definitely things will improve from a compliance side, including ease of doing business in India. However, what is there in the store in the new direct tax code needs to be seen, because I remember in the older time 2010 11, we've gone through one draft of the direct tax code. The draft was published, but that never seen the light of day. Similarly, there was a committee which was set up for reviewing the direct tax law and come up with a new provisions. I think they've submitted some recommendations, and government is now proposing to bring in something new without referring to what recommendations were submitted by such committee. So something which we need to understand is that this should not be another old wine in a new bottle situation, where the law is being brought in and then there are 100 other amendments by way of a notification and amendments which they bring in after the law is being brought in to make it more complicated. So if government needs more time, they should take more time, not really a week, maybe a year if they need. But the law should be simple and lucid. And when the intent of the legislature is to do that, that needs to be implemented in the letter and spirit. I'm very hopeful of this law, which is in waiting for more than 15 years. And I'm confident that this time, it won't be the old wine in new bottle by just renaming the explanations and the provisos as a subsection. That should not be the situation. One of the section has 20 other explanations in the proviso. So how complicated it is to read that section with so many explanation and provisos. So if they just make it as a subsection, it will still be as complicated. What it should be is make it simple and lucid and less litigated. That should be.
Shrikant sir wants to add
So
something.
I want to just add one line, like Parag bhai has very well said that it should be simple and lucid. So I would just differ here. It should not be that simple and lucid. Otherwise, our importance will be in question. So, and the intent of the law, trust first, scrutinize later. I hope what Parag bhai has said, like the law has some enabling provisions which will percolate this intent of the lawmakers through this bureaucracy channel or authorities channel. Yeah, that's.
No, I think one of the things which government has done, there's a lot of track to see, but then they brought in a strategy few years back where they said that we don't want to keep the assessments open for a long time, and therefore they reduce the period of assessment, and therefore they reduce the period of revising the tax return and processing the 143(1) or processing 143(2), doing the assessment. So it was working really well by way of filing a tax return, getting 3 months to revise it, and then assessments getting completed in time. Now bringing in a ITRU, for 2 years it was okay for you to update something. Now it has been extended to 4 years. So again we are going back in a circle where you are allowed to update your tax return. Though the provision requires you to update the tax return, people use ITRU to file a new tax return for the first time. The many this kind of provisions will again going back into the circle where the intent of the legislature was to allow people to file tax return on time, revise it within 3 months if there is a mistake, and thereafter you can update it subject to certain conditions. Updation for 2-year period was a very good provision. Bringing in a 4-year updation again is going back into the circle.
And
so,
that too again with a very heavy tax, additional tax.
So,
60%, 70%
Yeah,
is the tax
70%,
rate.
So I think I am willing to file my March 25 tax return today. Is there a discount? So that's what I used to ask Finance Minister, that if you want to levy a percentage-based additional tax for people who are filing late, there are people who are willing to file before time. Is government willing to give some discounts to them that you file before time? Tax provisions to bring in such kind of onerous compliances is definitely in my it is against the intent of trust first and scrutinize. So how do you say trust first and scrutinize later and bring in such kind of provisions where you are asking taxpayer to pay 70% more tax just because you forgot to file something or you forgot to revise something? That's where I am hopeful that the new bill will bring in some rationality there, and this doesn't remain only a slogan.
I think this discussion is never ending. We will move on to the next topic. So, amendments also brought in TDS and TCS. Nemin sir, what you would like to add there?
With respect to TDS, there limits under various provisions applicable for domestic deductors has been increased. I think the most of them are not that significant. I think a couple of them are significant are with respect to rent, which has gone up from 2,40,000 to 6 lakh. I think which is a very good number, and I think this will give a lot of relief to if this, in many cases there are joint you sometimes are giving rent to more than one person, and there even there you are extending 2,40,000. Now at least you have some leeway there, and you don't have to do compliance. Also, I think with respect to interest to senior citizens, I think they're putting more money in the hands of the senior citizens by increasing the limit from 50,000 to 1 lakh. Other than that, the increases feel like token increases are not very significant. Moving to the next one, the big one which they have done is they have done away with TCS on goods. So if you remember, first they brought in the TCS on goods, then they brought in the TDS on goods, and that both coexisted. That if you are doing TDS, then do TDS. If you are not doing TDS, then do TCS.
Created a lot
of confusion. People didn't understand. कि पहले क्या आएगा, पहले अंडा है कि पहले मुर्गी है, किसी को समझ में नहीं आता था in that situation. So there now we are having clarity now that they're done away with the TCS, so the TDS will continue to apply. Otherwise, there was going to be a back and forth between the vendor and the customer that क्या करना है, तुम काट रहे हो, मैं काट रहा हूँ, कौन काट रहा है, किसी को पता नहीं चल रहा है.
And we end up doing reconciliations.
Exactly. वो तो मतलब I think chartered accountancy very soon is going to have a whole subject on reconciliation. The amount of reconciliations we are doing in GST and in DT now, I think we could probably will have a subject or reconciliations.
We should also touch upon this new provision of
LRS.
no, the which last budget they brought in, that is the deductee does not file the tax.
Yes,
Tax
yes,
return,
yes.
yes.
So that
So
also
what a onerous provision that was, and what
Right.
was put on the taxpayer.
absolutely. So yeah. So just to give the background, a couple of budgets ago, they had introduced section 206 AB, which AB tha, I think. na?
Yeah,
The 206 AB, where if you are a non-filer, your TDS rate increases. So now that's fine. I mean, from the perspective of the non-filer, okay, you're penalizing him, but you're really not penalizing the non-filer. You're penalizing the deductor, because the deductor has to now go and find out.
Yeah.
So earlier, at the beginning, when they did not introduce any utility for this, there was a euphoria in the industry. हमको मालूम कैसा पड़ेगा? How will they come to know somebody is a non-filer? Do we have to ask everybody for their ITRs now? I was approached by a company which has 6,000 vendors. What do I do? So we said that we will, if you want, we will give you a service. We will liaise with your vendors. We will collect the ITR. Then, of course, as we were giving this proposal, I think they announced the utility on on Project Insight portal, where they said, but again, that became a problem that you had to register on that portal, then you download, you upload all your PANs, then you download the report where it shows whether 206 AB is applicable, not applicable. It became a very onerous requirement for the deductor, and we are glad that they have come to their senses and they're now doing away with it completely. So this budget now, they're proposing to completely do away with it, and there will be no different rate for a non-filer, and to that extent, the deductor requirement is no longer that onerous.
So, Nemin bhai, this brings me to a double standard which government generally follows. You look at, I have been reached out by a client. He sent me a GST number. Now, the GST number is expected to be. There's some problem with my mic. Studying. So, under the GST law, a business owner has to publish the GST number on the board of their shop or their workplace. So the GST number is a public number. In the GST number, you have a PAN number which is visible. One of my client reached out to me that कि साहब मैं फलाने घर पे लड़का देखने गया था और ये उनका GST नंबर है, इसमें पैन नंबर है, आप देख के बताओ ना वो रिटर्न फाइल करके.
Oh my goodness.
So I was able to find out वो फाइलर है कि नहीं.
कितने का फाइल करते भी मुझे लगा.
No, that information is confidential. Luckily.
But at least I got the information that whether somebody is filing the taxes or not filing the taxes free of cost on the government portal. So government is releasing this kind of data selectively while expecting industry to follow the DPDP Act and data protection bills and onerous conditions of 100 crore penalties there. So how government is trying to bring in this kind of provisions where the data which is private is made public by way of these kind of laws, where at least you get to know that somebody has filed the taxes. So bringing in such kind of onerous provision is like outsourcing the work of the tax authority. Tax authority has a PAN, they know who has not filed it, they have the addresses of people. They should go after them. And even if somebody does a TDS at a 10%, not at a double rate, at least to whom he has rendered the service. You can go and reach out to that person.
Absolutely.
With the correct address. So all of these effort which authority has to do, you are outsourcing it to the industry. So that's where I personally feel needs to be changed. So trust first and scrutinize later. So you are trusting us, you also trust your officer, and I'm sure they will do their duties and rather than outsourcing it to the people.
So Parag sir, on the GST portal, you can actually know what date they filed the return also, without even logging in.
Yeah. मैं भाई मतलब यहाँ पे मुझे एक ही बात मुझे याद आ रही है कि इसे ना सुबह का बुला घर शाम को घर लौट आता है तो उसे बुला नहीं कहते. So while it is a step towards ease of doing business, so it's a welcoming
No, absolutely.
provision.
No, absolutely. What we are trying to do is we are trying to say how bad it was in the first place.
Yeah, it was very
Yeah.
bad.
Ha,
It was very
ha.
tedious.
What is important is that when you're talking about the new income tax law, the
Yes.
government should take cue from such
Yes,
Yeah,
laws.
definitely.
absolutely.
Not bringing into that law, otherwise it will be another GST story.
So
where
if-
there are 100 other
So,
notifications.
Parag sir, if you remember in the DTC draft, I think the 2010 draft, there was a category of taxpayers called non-filers. So, if you stop filing your return, you would for a certain number of years, you would be called non-filers. So if that becomes a part of the new law again, we are again going back to the same thing which we just got out of. That why label somebody as a non-filer? If I have income, I will file. If I have income, you can see if somebody has deducted TDS, you can see I have income. Send a notice to me and check why am I not filing the return. I may have a good explanation for not filing also.
So I think we should now move on to the next topic. Yeah. So Nemin sir, again I'm coming back to you as you are expert in international taxation and transfer pricing. So what amendments would you like to highlight in that
So
area?
So for international tax, I'll just highlight one amendment. I think in section 9. So let's take our memories back to 2016 when the BEPS action. So BEPS is a base erosion and profit shifting initiative of OECD had released an action plan 1 report where they had largely discussed taxation of digital economy. One of the recommendations in that report was introduction of the significant economic presence, as the current P provisions were not enough to tax income from digital economy. In order to streamline that, the Indian government then, accepting the recommendation of OECD, introduced the provisions of significant economic presence as a part of section 9, but it was suspended for a couple of years. Also, when it came into force, I think this government has been very clear that this provision will only apply if the tax treaty does not apply. So there are two situations in which this can apply. One, if there is no tax treaty, you're dealing with a country where there is no tax treaty. For example, Panama. I have a client which is having some transactions with an entity in Panama, and there is no treaty protection there. So there the question of significant economic presence came up. Other than that, would also be if the tax treaty benefits denied in some case, there also significant economic presence provisions could kick in. Now, in that respect, one amendment was announced or is proposed to be announced in this budget, that they are excluding from the scope of significant economic presence the activity of purchasing of goods in India for the purpose of export. Now, the as well intentioned as this exception to the SEP is, and this definitely will benefit those who are indulging in this activity, and this brings in line with the other provisions of section 9, which also do not recognize this activity as a business connection in India. As well intentioned as this is, it has always been our understanding that significant economic presence only applies to digital economy and not to transactions other than digital economy. By putting in this exception, are we now saying that this was always included, and this and all the other transactions which are not from the digital economy were included in the definition of significant economic presence, and I'm excluding only this? Are we saying that, or are we only putting a clarification for this particular activity? That remains to be seen. But yes, as well intentioned as this could open a Pandora's box in terms of litigation with respect to significant economic presence. One of the other amendments I want to touch upon is in the arena of transfer pricing. I think again there's been a lot of discussion on this. The government has announced the determination of arm's length for a period of 3 years. I think a lot of people are calling it block assessment. I think let's be clear, block assessment only applies in such cases. This is for a block period of 3 years, or we can just say for a period of 3 years, and let's leave the word block out of it, because otherwise the suspicion will be that this becomes a search and seizure case, which is not the intention. So the arm's length price for in transfer pricing will be determined for 3 consecutive assessment years. I think a lot of people have already started calling this the game changer provision and this and that. I want to wait and see what the rules are. I think yet we don't have the rules of how procedurally it will work. Also, the current provisions with respect to how the subsequent years orders will be handled, not necessarily very clear. So let's wait for the amendments to the finance bill. Maybe they will try to fix it there. Also, let's wait for the rules to come in to see whether how beneficially actual it is. Again, an extremely well intentioned and well thought of provision, but I don't know if the implementation is at this point uh, uh, at a point where taxpayers are going to be embracing it wholeheartedly. So these were the two changes in. Also, sorry, one more aspect is with respect to foreign direct investment. I think they have raised the FDI limit for the insurance sector from 75% to 100%. This again will be a welcome change. There could now be 100% investment by a foreign insurance player in India, which is indeed a welcome move. We obviously need more FDI in insurance sector. Of course, there are many conditions with respect to investment in insurance sector, and those conditions will continue to apply even for the additional 25%. So these were the three changes I wanted to highlight. Smriti?
So apart from international transaction, there is also a lot of amendments in IFSC. So Shrikant sir, we would like to hear from you.
Yeah. So IFSC is basically International Financial Services Center. It is based at Gujarat. I'm just giving a full form of that first. Maybe not everybody is aware about it. So now the government want to make IFSC as comparable to Singapore as a financial center, right? So now this particular center is evolving. It is not yet fully developed. It is evolving. A lot of infrastructure is being developed. A lot of laws around IFSC are being developed. The good part is there is only one authority at IFSC. They only handle the questions of interested entities, and they only provide resolutions also. And particularly, they provide resolutions. Whomsoever you talk to, those who are having units at IFSC, they always appraise about IFSC authority that they are very approachable and they are very considerate while handling their applications and all. So that's a basic about IFSC. And coming to the amendments, yes, there are very welcoming amendments in IFSC also, in income tax related to IFSC, where I'll touch quickly. So I'll touch upon them very quickly. So one is related to life insurance policies. So now insurance companies who are based at IFSC, they can issue insurance policies to non-residents, and whatever gains those non-residents have, that will become completely non-taxable, which brings them parity with the foreign insurers in the similar financial center. So this is the welcoming move. This will definitely help insurance companies, insurance sector to thrive in IFSC. Second amendment is related to ship leasing business, where they have brought this ship leasing business at par with aircraft leasing. There are certain provisions in income tax where, in case of aircraft leasing, there are some tax exemptions, which was not there in earlier in for ship leasing business, but now they have brought in at par. And now there is no capital gain, and there is no tax on capital gain and dividends for ship leasing companies. So let's understand quickly why they brought this provision. So what happened that when they brought ship leasing and aircraft activity in IFSC, so many companies came in, they started business, and see, ships are very capital intensive asset, right? So what happens? At times those companies don't want to invest fully in one vessel, so they generally have various special purpose vehicles. They bring in some other investor, and they jointly invest in particular vessel. So till now, what used to happen, that if that company is paying any dividend, if that special purpose vehicle is paying any dividend to the holding company, or if that holding company is selling any shares, and if they are having any capital gain from that, it used to be taxable. But now, if that unit is in, that SPV is in IFSC and that holding company is in IFSC, this tax, they have provided tax exemption to those for such payments of dividends and such capital. So this is again a welcoming provision for such businesses.
So basically, for two-layered companies now, they also will get a benefit.
Yes.
So we will definitely love to hear from you, but due to paucity of time, so we will just come to the conclusion.
Just one point from me also.
Okay, I'll just finish.
You go on.
this.
Yes.
There are some sunset. There are some extension to sunset clauses also in IFSC, which is very important to know, because what happened? All these IFSC exemptions were available till 2024 only, but in the last budget, which was the last budget of second term of this government, so that time they extended it till 2025 only, just by 1 year. But in this budget, they have extended by another 5 years, up to 2020-30, which is again clearly shows the intention of government to develop IFSC, just like Singapore or other Mauritius or other countries.
So just one last point, Smriti. As I was expecting, and contrary to what most international tax experts were expecting, the Indian government is again not announced anything on Pillar 2. So quickly, Pillar 2 is a global minimum tax at 15%. A lot of countries, including Australia, countries in Southeast Asia and Europe, have implemented Pillar 2. But India has yet again neither implemented Pillar 2 nor have made any significant announcements on Pillar 2. So just wanted to bring that to the notice.
I was coming to that point. So
okay.
So budget covers a lot, but there are always some untouched points.
Yes.
So I just wanted to hear from you all what untouched points you would like to highlight so that it could reach to the most.
I was expecting that another 15% tax on the manufacturing should have been continued. Okay. So I was expecting that there will be some extension to it, which will follow. So that is more to do. So last budget also, after the budget was done, the government appealed to the private sector that we have done our bit. Now it is your time to put in money. This budget also the same thing happened. But while the government did their bit, they did it by putting more money in the hands of consumers. There was nothing great for the corporates in terms of the tax rates or incentives. Maybe accelerated depreciation in the times like this could have been of a great help if not 15% tax would have been brought in for whatever macroeconomic reasons, be it on the vehicles, be it on the plant and machinery which we installed, be it on the employment generation which we do. These kind of provisions should have brought in for promoting the corporates to set up a bigger manufacturing facility.
Shrikant sir, do you want to add anything?
Yeah, I agree with Parag bhai that 15% income tax for manufacturing companies, it should have been extended. This clause should have been extended, but it was not extended in the last budget also. So, but still, if government wants to make in India, they are promoting make in India. They want everywhere the talk is China plus one. So, वो कैसे होगा? It will happen like this by promoting. By giving benefits to corporates to lower income tax rates.
Do you want to add anything on international time?
No. I think this. I already said my point on no update on Pillar 2 or Pillar 1.
So hopefully we see some amendments in the near future with these points. So it was definitely an incredible session with all these esteemed panelists. So while tax laws evolves, what remains constant is the need for the businesses and individuals to adapt it proactively. So thank you to our esteemed panelists for their valuable insights and for the audience to being patient and to listen. So we will now take a break of 5 minutes and this will followed by the in-depth discussion for the GST. So thank you everyone. Stay tuned. We will be back shortly. Thank you.
Thank you, Smriti. Thank you. Thank you.
Take care.
Hello, hello, test, hello. Hello.
Welcome back all. We have concluded the first part of the session, that is direct taxation. Let's move on to the next part, which is indirect taxes. I'm pleased to welcome our two esteemed panelists for the indirect tax discussions. Our first panelist, CA Shailesh Rathi, Managing Partner at RRCO, a seasoned expert in indirect tax, customs and import-export advisory, specializes in India's foreign trade policy and helping multinational clients navigate international trade complexities. His strong background in business consulting adds further value to his advisory services. Welcome, Shailesh sir, to today's session.
Thank you, Tulsi.
Next joining us is CA Palash Kankariya, partner at RRCO, who is specialized in GST and CFO outsourcing services. Known for his meticulous approach, he advises client on optimizing tax structure while ensuring compliance. With experience in both corporate and individual advisory, he plays a key role in driving financial strategies in GST. Welcome Palash sir to the session.
Thank you, Tulsi.
I would like to introduce Rishikesh Birla as a moderator for Indirect Taxation. He is Assistant Manager in CFO Outsourcing Services at RRCO. Over to you, Rishikesh sir.
Thank you, Tulsi, for the kind information. Let's dig on to the session. So I will just ask about to begin our session. What's your overall take for this budget 2025?
Well, Rishi, the budget is already been introduced by Nirmala Sitharaman Madam, Honorable Finance Minister. She's been emphasizing on various aspects related to indirect taxes. That would include IMS, that is invoice monitoring system, which is going to change the entire structure how we are currently filing our GST returns. The ISD mechanism, where it is effective 1st April 2025. It's mandatory to pass on the credits to respective branches. Then there are other mechanisms which is we'll discuss in due course of time. But I'm sure these mechanisms will surely have some impacts on the indirect tax mechanism, in the indirect taxes, how we are currently operating and how we are currently practicing on the indirect tax.
Right. So what's your view of Palash on this
So,
budget?
adding to what Shailesh sir already said, there are two major things which I feel are very important from the perspective of indirect tax. So, first is retrospective amendment brought in by the government of India now, which is very famous, and the second one is track and trace mechanism. So, in track and trace mechanism, like Shailesh sir said, that IMS will change whole tax structure in case of IDT. Track and trace mechanism is the same, because here the goods will be tracked in the supply chain by government of India. So I'm looking forward to discuss practical aspects of it in our conversation today.
Thank you, sir. So let's first we will move on to our key amendment related to the credit note. Several litigations have arisen due to mismatches in ITC claims between buyers and sellers. The government has now made changes to regularize the ITC mechanism. So what are your thoughts on this move of the government regarding this ITC claim?
See, currently, as you rightly mentioned, there are various litigations which are happening about match, mismatch, 2A, what is 2A, what is 2B, and there has been continuous change in the overall taxation structure. Earlier, it was just when it was introduced, it was just a GSTR 2. When it was introduced, it was just a GSTR 2. Then it was introduced as a GSTR 2A. Then it is now GSTR 2B, and now with the introduction of GST IMS, the structure is government want to trace each and every invoice on which you want to take a credit. So the IMS system has already been in place, or it's in I'll say in testing phase, which is not mandated by yet not mandated, but soon it will be mandated for each of individual. So IMS mechanism will help government to trace individual invoices on which you are availing the credit on specified items, and if you want to postpone the credit or if you want to reject the credit, there is an option of rejecting or hold or pending kind of buttons are available. So they are replacing the word auto generated with the system generated reports. So auto generated instead of they're calling it as a statement. So it is going to be changed where individually you will have to accept on which invoices you are taking credit and on which invoice you are pending, keeping your input tax credit pending, which can be claimed in a future time, maybe in the next few months. It's important to note here, Rishikesh, that whenever we are claiming an IMS, or we are preparing a statement based on IMS, we need to keep in mind various aspects related to input tax credit conditions which are defined, like you should have invoice, you should have received the goods in your premises, you should have received the other party must have paid the appropriate taxes. So there are various conditions which are mentioned in the input tax credit conditions. So if those conditions are satisfied, then only you are supposed to put as a tick mark, or you are supposed to accept that invoice. So we feel that it's going to be challenging time in times to come. I think Palash can highlight few views on practical aspects of this IMS, how it's going to be implemented.
So, as rightly stated by Shailesh sir, that there are uh, check items which needs to be ensured before clicking that item that I want to avail this credit. So you should receive goods as well. So for example, some supplier I receive goods as on date of 10th of February, and I have received those the invoice for the consignment on 31st of January. So it will be a tricky position for me to trace all those check items, whether we have received the goods, whether we have received the invoice, and then click on the item, because once you clicked it, once you accepted it, once you rejected it, the correction of it is impossible, because right now there are no guidelines on the correction of the same. Okay, and as rightly said by Shalesa, there are three action items: accept, reject, or pending. Pending is also a action which you can take. Okay, if you don't take one of these three action, then it will be considered as auto accepted. Okay, so that's why all these aspects make this process very cumbersome, and some circular, some clarifications are expected in near future from CBDT around IMS facility. And one very important point I would like to mention here is that supplier's liability activates based on feedback given by the recipient. So here the important point which has been brought in by this budget 2025, that credit note will also be a part of this IMS facility. So for example, being a supplier, if being a recipient, I send back the goods and supplier issues the credit note. Okay, and if I reject that credit note, then there is no option with the supplier, because the goods are already being received, e-way bill has already been generated, and the correction of this won't be possible. So we are expecting guidelines, some circular, or if Shailesh sir can share his opinion as to how this can be dealt in near future.
uh, Reconciliation was the only mechanism how we can keep a track of such things. And I'm sure that in times to come, professionals like us will have more opportunities to reconcile the books of accounts with systems, books of accounts with the IMS mechanisms. So time is there where we have to be ready with such challenges of tracing individual invoices instead of on the gross basis. So let's see what government has in their mind, and in times to come we will see these challenges which we'll have to face, and we will continue with. What important aspects what you mentioned is about credit note or the passing on the credit. It's important, like with this budget introduction, it is mandatory for the recipient of credit note either accept or reject. Unless it accept, the supplier's liability can't be changed. Supplier has to accept the recipient of the goods or services has to either accept or reject the services credit note. Unless the credit note accept or rejected, the recipient, the supplier cannot change its tax liability. So this mechanism has been introduced. So indirectly, they are making it mandatory for every action to be taken on this MS. So I'm sure in times to come we'll have more circular, more notifications to give effects of this. But this is going to be our day-to-day life in times to come.
So it's true that reconciliation is the easiest and the hardest task.
Yes.
So as we discussed the usefulness of IMS facility and its technicalities, do you believe that the implementation of IMS facility will help in reducing the tax evasions and improve compliances?
It will surely reduce tax evasion and improve compliance, but this process right now, as I earlier mentioned, it's a cumbersome process. So once it is implemented, there will be a lot more circulars, a lot more clarifications from government side, so that this will be implemented in a right way. Right now they are trying and testing, and there is unrest in the taxpayer that this facility will disrupt the business operations. But once this is settled, once this as GST is now 7-8 years young, this facility will also give us some strengthening in the business operation, but it will take some time. So after receiving such clarification, it will be a good practice to run the IMS, and it will be a tax the mechanism which can restrict the tax evasion and bring in the business efficiencies.
So that was a insightful discussion regarding the IMS facility and ITC mechanism. So next we will move on to the next key amendment and important amendment from the budget speech. Specifically regarding the 17.5, that's block credits, apportionment of credit and block credit regarding the plant and machinery. The term plant or machinery has been replaced with the plant and machinery. We all know the Supreme Court judgment regarding the safari retreat case law. So now the government has overruled that decision uh, uh, after bringing this retrospective amendment in the act. So what's your take on this?
So here, while coming to this discussion, we discussed that we won't mention sections here in the discussion, but this is very infamous section in GST law, section 17.5, which talks about block credit, and every taxpayer know this section by their heart, because all the credits which are being blocked is by this section 17.5, most of the credit, I would say. So in this section there are two terminologies used earlier in the law: plant and machinery, and the second terminology was plant or machinery. And in GST Act, only and only plant and machinery was defined. There was no explanation or definition with respect to plant or machinery. So this case is based on this definition only. So in Safari retreat case, what Safari used to do, Safari construct mall and lease out their premises to the tenants. So here, what they have done, they claimed that our mall is a plant, because plant or machinery, in that in from that phrase they picked up plant. And plant, if we go by functionality test, as Supreme Court has done rightly, by going the functionality test, what they are of the opinion that mall, when it is used in course or furtherance of business, it can be treated as plant. So that's why under section 17.5 this credit wasn't blocked, and this decision is upheld by Supreme Court as well. But recently government has come up with retrospective amendment in this aspect. So we request all the taxpayers who has taken or who has availed credit due to this judgment, they should all reverse those credit, because there is now retrospective amendment in section 17.5 with respect to these definitions. So I would like Shailesh sir to explain his opinion on this.
You have rightly mentioned that this is a retrospective amendment, which is generally not done by government, but this in GST law there has been continuous various retrospective amendment, as if they never intended to give such credits. So this is resulting into unrest from the industry. I'm sure this provision will be challenged in court of law, and we'll have to wait whether such retrospective amendment can be effected or not effected, because people have already availed the credit, filed their returns, filed their taxes appropriately by availing the credit, and now if you talk about such retrospective amendment, it's going to be harsh penalty or harsh tax recovery from the people who have taken appropriate benefits of law, which is poorly drafted by government. So if Supreme Court has rightly upheld the provisions, then it should be taken in a right spirit. But however, it's government choice that they they never intended for such provisions where they want to allow the credit of immovable property, and always they meant plant or machinery means plant and machinery. Such retrospective provisions have been introduced. Let's wait and watch again till the time it gets enacted. One, and secondly, if it's getting challenged in court of law, I'm sure there'll be cases which will be challenged in court of law for such provisions. Likewise, Vodafone or likewise similar case earlier. It has to be proved itself to be in court of law, and in times to come we will see similar provisions. But for the time being, to understand from the regulatory perspective or from the understanding of budget analysis perspective, I'm sure this is going to be one of the largely impacted amendment, which is retrospective. And government has made it very clear in their 55th council meeting itself that they will announce an provision which will be retrospective. So nothing, no surprises from the budget. But now it's a time to see since the amendment is proposed. Once it becomes act, I'm sure we will have some cases which is going to court of law. It is the sanctity of this section.
One question just struck me here, sir. As we are talking about finance bill from the perspective of, the direct tax bill, which will simplify the understanding of direct tax and bring in more clarity to taxpayer. Do you think that there is need in case of GST as well for such bill?
So GST is a very young law, 2017. Like you and me have seen such law, 1961 income tax, when we were not even born or not even our parents were young. So obviously, such old law needs and revampment, needs to be changed. But for the GST, I'm sure no such thoughts are there as of now. But you and me have seen every day there is a circular notification in the GST coming in. So this act has been still been continuously evolving, because when it was thought and when it was introduced, then and now there has been lots of change. Likewise, we at the beginning we said when we started it was proposed to be GSTR 2, then 2A, then 2B, and now IMS. This is just one of the example of changes which has been proposed in 7-8 years old law. So it has time, and government is also coming with appropriate measures or appropriate mechanisms to safeguard their interest and safeguard the interest of industry as well sometimes. So I'm sure it has long way to go, but I'm sure that there are no such thoughts in the government mind.
Understood.
Okay, so great to know about this case law and that insightful session. So moving on, GST department in their 55th council meeting proposed the new mechanism, that track and trace mechanism. For giving this effect, they have made amended. They have introduced 2 new sections and subsection in the section 2. So could you brief us all about these sections and the concept of track and trace mechanism?
So before going to the mechanism, I would like to recall a sentence which Honorable Union Finance Minister Nirmala Sitharaman Madam said, that in case of direct tax, I would like to mention specifically that she said we would trust first and scrutinize later. But in indirect taxes, I would like to say that if we are bringing in such kind of mechanism, track and trace, then here the scrutinize first and trust later mechanism is being implemented. So is it necessary? Yes, it is, because here government wanted to track those items which are being smuggled, which are being used for tax evasion. So to bring in such mechanism which European Union has already adopted, it's a great move, I would say.
Right.
From the perspective of nation building. If you talk about ease of business, it won't be a ease of business for some time at least. Once people get used to of it, then it would be a great tool for them as well. So here the basic thing is there would be a unique digital identification mark for every good. Okay, and by that digital identification mark, government could be tracking the goods in supply chain, where the goods are, where are they moved in the supply chain. So these are this compliance or this mechanism is basically for restricting the tax evasion. And as EU has already adopted this, India can very well do that. Here a specific person will be appointed who will be issuing this digital identification mark, which has to be there on the goods. uh, Once they are able to track the goods, they will be able to track the revenue as well.
I think the goods is just not they want to track at the location of manufacture. They want to track the goods in the entire supply chain. That
Right.
includes at
Right.
the distributor level, at the retail level, at the consumer level. So once it starts at the manufacturing level, then they will have the unique identification number for each goods, and then how it is getting supply chain, who is ultimate consumer, and whether government is getting its appropriate revenue. That's what government want to press. I think this move will have good impact on the revenue, and we'll see good revenue growth from particularly some of the items like cigarette and masala, or maybe sand, which is easily running a parallel economy, uh, where most of the time it's not getting invoiced, or it is being used as in cash portion most of the time. So such mechanism will surely have an impact on collection of government, and to stop the malpractices in this particular industry. That would include that, in my view, that would include scrap, or maybe copper, aluminum. So anything which has a higher rate of duty and
Tax evasion
tax evasion prone are there. So I think DGCI has recommended few of the items in which they have found similar items. DGCI will further recommend, and based on the recommendation, government will introduce few more goods in this, and we will see this is getting implemented in a time to come. This will surely have good impact on good tracking mechanism from the taxation perspective. But yes, as you rightly mentioned, this is going to be one of the I'll say not in line with the government ambition. Trust first and scrutinize later. This is like scrutinize first and trust later, but obviously it's for certain type of goods and not for all type of goods.
This is very important, that this will be applicable to only certain goods, because if at all that was applicable to all the goods, then I believe there would be opposition from commerce industry or all the industries in general.
True. We will see soon the notified goods which is mentioned here. So we'll have some goods notified, and I believe those will be which is recommended, or which council has some recommendations in their it will be more or less on the similar lines.
So after the GST department notification, we will also notify you regarding the goods that are notified by the GST department. So other amendment in 55th council meeting was omission of vouchers from the ambit of GST. Was it to simplify compliance or avoid double taxation, or are there any other reasons for the same?
As per earlier provision of vouchers, the taxes are due only when either of two, that is, if at the time of sale of voucher, if you know what type of goods you are going to get out of that voucher, or in all other cases at the time of redemption of the voucher. These are the two mechanisms. Now government is very clear. We don't want to collect the taxes at the time of sale of voucher. We want to collect taxes only at the time of redemption of the voucher. Why it is important from the perspective of government, from the compliance perspective? Because at the times when the redemption is happening, we don't know what kind of goods it will be, when it will be redeemed, further whether it will be redeemed or no. Even that is under question. So government is very simple, and it's important. Why to collect the taxes when goods are not sold? It's just money is collected in advance. So it's a simplifying the mechanism. So I'm sure the trade and industry will benefit out of this provision, and it is for good reason.
Nicely explained, sir. So now the key reminder for our audience for taking ISD registration, if having more than one registration, GST registration in different states, which will be compulsory from 1st of April 2025. So an amendment has been brought through this budget in ISD provisions to include RCM to be paid on interstate inward supplies and distribution of the credit of the same. Please guide our audience what is the ISD concept and what were earlier provisions regarding this.
So let's first understand the concept of ISD. Uh, so ISD's full form is Input Service Distributor. So its meaning is hidden in its name only. Input service, that means a taxpayer receiving an input service, and distributor. So the ITC on that service needs to be distributed. Why is it so? We see that there are many companies who are operating through their branches in India. So, for example, some company has HO in Maharashtra. They are operating through their branches in other states like Gujarat or Madhya Pradesh, right? So, in this aspect, there are few services which government observe that those services are being consumed for all three branches, but the input credit is being taken at HO or at branch office. So being GST a consumption based tax, this consumption principle is being utilized or considered here in case of ISD, where for example if HO receives audit services and these audit services are being utilized or consumed in all the three branches, two branches and one HO, then input credit of the same should be distributed in branches as well. So earlier this was optional facility which GST has. Now as it was observed by government that not many of the taxpayers are opting, and the input are not being distributed based on consumption, they have made it compulsory. So I'd like Shailesh sir to share his perspective on this compliance.
So, as you rightly mentioned, this mechanism introduced to in the mechanism or in the principle of consumption-based tax. It's important that each state get their share of taxes. So from that additional compliance for sure, but this was there since inception of the GST ISD, or either there was an option for either to opt for ISD or cross charge. Now with the introduction of it's mandatory to have ISD, with the introduction of bill, there has been one amendment made to this where government want to introduce even the RCM, that is reverse charge mechanism, also to be considered as for the purpose of distribution. So intrastate was already introduced, but now with this amendment, intrastate supplies have also been covered. For example, you're importing some services related to subscription of some software or foreign services, architecture services which you have received, or similar services which you have received, on which you are required to pay reverse charge mechanism, GST under RCM. This needs to be distributed amongst all branches. So this is an amendment which has which has been placed in the current bill. This amendment will ensure that such taxes on which there was no clarity earlier whether the RCM was required to distribute it. Now it is with the amendment, it's clear that even the RCM needs to be distributed to each of the states in the ratio of their pre-decided ratios of turnover. So this mechanism will help government to have taxes passed in the appropriate state in which it belongs or in which the services are getting utilized.
So I remember that the ISD provision was in earlier tax regime as well. In VAT as well, there was ISD provision. So this is nothing new. The amendment is in that they are bringing in RCM also in this consideration. So I mean the ISD provision was the same in VAT regime as well.
Right, ISD is as the premise of law is consumption based, so it has to be appropriately done. So I'm sure government has its accounting mechanism for the distribution of taxes. So is you are at compliance cost.
That was an excellent overview about the GST amendments in finance bill. So and thank you for it making so clear for our audience. So we will now let's shift our focus to the customs and other indirect taxes. As everyone watching here have heard about many exemptions regarding in BSD provided for various sectors during the speech of our Honorable Finance Minister. Uh, please elaborate the sectors which have got exemption in BSD from in budget.
So particularly, government is focuses on pharma sector. One, second is EV, electric vehicles. Third is batteries and some mining industry. These are the prominent areas of the industry in which government has reduced their tax duties or the basic custom duties to a great extent, and also few of the sectors on which government has exempted the basic custom duty. Why it is so? Because government want to import the pharma for the specifically cancer drugs or to fight with the healthcare industry. They have specifically exempted or reduced the duties on various pharma or the cancer-based drugs which are supposed to be imported. Second, EV, which is a need of an hour where we need to be carbon zero, net zero credit from the to not to have any footprint on the carbon. So it's important we shift our focus on specifically moving to the green energy. So EV is one of the prime important. So EV is another, electronic vehicles is another area where government has reduced the duty. At the same time, government has introduced some mechanism where for the trade, it is important to understand that mechanisms simplified. Our shipping bills or bill of entries can be amended instead of 2 years. There is one more year is available for the amendment. Obviously, subject to approval from the higher authorities as such. So, if the assessments and everything is pending, that they get additional time frame to get their assessments done. So, every industry will benefit out of it. The mechanisms of customs duty and export duty as such. So, these areas or these industries are otherwise also benefiting out of it. But in industry also we will have good governance in times to come, particularly in customs, because customs has the uh, custom department has been revamped over a period of time, where most of the things are now online. Most of the things are getting through introduction of ISD portal, through introduction of online mechanisms of bill of entry, shipping bills, mystery file. There are various declarations or timelines has been reduced. I'm sure this is for good governance and good good for industry.
So we are yes.
An additional tax reform I would like to mention here. It might be an indirect reform, but government is strengthening their Make in India policy by setting up national manufacturing mission. So yesterday we were discussing the challenges which were faced by one of our clients while clearing goods in customs, who is contributing to Make in India reform, Make in India policy as well. So I hope that with this reform and with setting up of national manufacturing mission, those challenges will be addressed, and the changes which I am expecting here is not in the duty structure but in the policy and the procedures they follow.
So we have talked about the imports. So as we heard about the exports in the budget regarding the export promotion scheme having 2,250 crores outlay, what do you think on this move of the government?
So government's focus has always been on promoting the exports and reducing the import, because that will help to balance the payment BOP. Because government wants to have more foreign currency, because as you know, dollar is been continuously appreciating, is getting continuously depreciating. It's important that we strengthen our economy by having more focus on the exports. So government has various schemes to promote exports, like road tip is there, where government is incentivizing various industries to promote the export. There are various other schemes, likewise PPCG, advanced license, MOAs. These schemes is surely help government to strengthen their exports and will have good impact on exports. So ease of exports is also has been there. So out of these 2,250 crores or 2,300 crores, government will surely able to achieve what they are targeting in times to come. So government mechanism is the Commerce Ministry has always been of opinion. You should not depend on the incentive. You should work on your own pricing. But with this provisions which has been introduced of 2,250 crores has been allocated for this, the government has some plans to promote exports and have some good mechanisms to incentivize the exporters to earn better credits.
To reduce the BOP.
Yeah, so obviously, everyone is working to increase the export and reduce the import. Trump is also working on the similar lines where he's insisting that everyone should work within America and you should not be dependent on any of the importing. So, likewise, government has introduced various mechanisms. Make in India scheme is there, for promotions, these schemes are there. So this will surely have good impact to balance between here. So these are my thoughts about export promotions schemes or the allocations.
So, so this is for audience. Audience, we now invite your questions. Questions. Feel free to ask that's on what's in your mind regarding the indirect taxes. You can put your questions in the chat section of this webinar, and our experts are here to help you to go to solve your questions.
So as far as I would like to contribute one more thought which during our discussion I will list upon. One government as earlier panelist about direct tax mentioned, government has given away 1 lakh crores of revenue because of introduction of 12 lakh as a basic exemption, or the by introduction of rebate up to 12 lakh there won't be any taxation. The government is going to benefit out of this also because the consumption is going to increase. Obviously, when the consumption increases, like if I have 1 lakh rupees extra in my hand, obviously I'm going to spend that, at least 50% of that I'm going to spend in this for buying something, or by spending on leisure trip, or by buying home appliances for middle class will surely have their plans, whatever they'll have their saving. So government will benefit out of this as well by earning GST on these portions. So this is a smart move which government has done. On the one side, by reducing the giving up the money in the hands of taxpayer, and this will indirectly benefit to grow the economy because there is a cyclical effects of ripple effects which this 1 lakh crore will have. Just not the consumer. This is going to be overall industry will have full impact of this. So yeah. As of now, so far in the year 2024-25, we have collected more than 14 lakh crore as a GST revenue collection. I'm sure with this introduction of a new budgetary provisions allocating more funds in the hands of taxpayers, we will see more growth in the GST in the next year 2025-26. Let's see what government has to achieve out of it. I'm sure it will have a good impact on the GST collection in the times to come in the next year 2025.
We also heard about 20 lakh collection in the year 23-24. We hope that will increase in 25-26 by this 1 lakh crore foregone by the government.
Sure, it will have a positive effect.
Thank you, sir.
What an incredible session, sir. Thank you for the key insights and deepen our knowledge about the direct tax and indirect tax commitment. I would like to thank our distinguished panelists, CA Parag Rathi, CA Shailesh Rathi, CA Shrikant Mundra, CA Palash Kankariya, and CA Shailesh Rathi and CA Nemin Shah for giving us a key insights about the amendments. And each of you has offered a fresh perspective that only deepened our understanding but also inspired us to think ahead about how these changes will shape the future. We also thank our camera team, moderators, organizers, co-organizers, and support staff for all the support that they have been given for smooth operation of webinar and making it a big success. As we move forward, let us remember that while budget defines the framework, it's our actions that define the future. Until next time, stay curious, keep adopting, and lead the charge in changing the future. Thank you so much, everyone.
Thank you.